Still, things happen in the US stock market. The AI rally keeps going strong in 2026. Tech-edge stocks rise across the board. Nvidia hits new highs. Google, Oracle, and Amazon also set record levels. Microsoft, the top AI leader, trades against the trend. Its share price keeps falling. Dow nearly 8% year-to-date. It lags far behind other AI peers. Size firm has solid business fundamentals. Its Q3 FY 2026 earnings are incredibly impressive. QRTE revenue hits $82.9 billion, up 18% compared with last year. Net profit near $32 billion. It ranks among the world's most profitable companies. Annualized DAI revenue tops $37 billion, a sharp surge of 123% year-over-year. Azure cloud growth rebounds to 40%, well above all market expectations. Great at performance and tech but weak share price. Here comes the key question: does the market misjudge Microsoft, or its AI strategy has hidden risks? Market debates focus on Microsoft's main problems: high valuation and huge market size. AI investment needs a long time to pay off. Investors worry about its capital layout. Billionaire spent on AI infrastructure with no short-term profits. Annual capital expenditure reaches $190 billion. Funds flow into data centers and GPU computing power. LSO AI infrastructure and Cop-IoT ecosystem. No visible returns can be seen so far. Retail investors holdouts. Shares face selling pressure while LSTRE sees a dramatic reversal. Top investment banks raise Microsoft's price targets. Goldman Sachs targets $610. Piper Sandler at $540. JMP sets target at $550, while Wells Fargo goes to $650. Netherlands 44% upside in potential gains. Match all institutions increase holdings. Heavily lag and every investor. Bill Ackman makes big moves in Q1 2026. He spent over $2 billion, purchased 5.6 million Microsoft shares. The stock takes 15% of his portfolio. Size is an extremely bold bet. Retail investors sell shares out of panic. Top institutions and elites buy the dip actively. Told we talk facts only without bias or empty words. We analyze Microsoft's bull and bear logic. Discuss its upside potential and potential risks, AI spendings risks and development chances, Nvidia's new AI PC catalyst and real valuation level. Plado's practical trading strategies. For reference, you will understand why Microsoft is a key pick to watch closely in the second half of 2026. First, let's check the overall market. It explains Microsoft's abnormal trend. S&P 500 and Nasdaq near record highs. Nasdaq 100 shows extraordinary strength. It has risen for 7 straight weeks. In 41 trading days, it stayed strong above the 10-day moving average for 40 days. Bullish momentum remains powerful as stocks usually rally faster towards year-end. The bull market lasts 13-26 days. So far below the historical average of 1964 days. The bull run is far from ending. Market divergence becomes severe now. Some ICO, NDUCTORs and AI infrastructure lead the rally. Some software stocks recover slowly on Microsoft moves weak on its own. It is the biggest underperformer. In AI stocks, the gap gets wider in longer term. Google surges over 100% year-to-date. Nvidia rises more than 50%. Oracle gains around 40%. Microsoft drops nearly 8%, the only laggard. Its business foundation is still solid. Over the past 5 years, it delivers steady gains. Total growth nears 90%. Outperforming S&P 500 by a large margin. It just faces temporary valuation concerns. Size is a good entry point for long-term investors. Top investor Tom Lee shared his opinions. 2026 will see frequent market fluctuations. We'll see breakouts and swings will appear alternately. AI stays the strongest market driving force as companies keep AI transformation. Corporate earnings keep moving up. AI lifts S&P 500 earnings by $10 in Q1. Full-year earnings growth hits $40. The index has huge valuation upside. Market volatility remains before December. Prices will not rise in a straight line. The AI trend stays firm. Capital no longer chases all AI stocks blindly, invest or select targets and price stocks differently. Now let's look at Bill Ackman's logic. It's why institutions buy shares on dips. Ackman's fund bought massive Microsoft stocks in Q1 2026 billions of dollars invested not for short-term speculation. Ackman focuses on high-quality enterprises. He avoids blind diversification and market hype. He only picks firms with long-term growth. Market as often mispriced top-quality companies. Gray-at stocks get sold off due to short-term swings. Share price deviates from actual business value. Mispricing brings chances for long-term investors. Microsoft's 3-year IR exceeds 30%. Rare opportunities exist for giant firms. Microsoft is not ultra cheap, but traded at a discount. Its fundamentals rank among global top-tier. Revenue and earnings beat forecasts steadily. It has a sound balance sheet with $78 billion in cash reserves. It covers the whole AI industrial chain. Current price is lower than its 5-year average. PE valuation sits at historical low range. Let us dig deeper into Microsoft's strengths. Latest quarterly revenue, $82.9 billion, 18% growth year-over-year. Gross profit hits $56 billion. Net profit reaches $32 billion. High profit margins across the industry. SREE core businesses drive steady growth, no reliance on single business line. First-day productivity business revenue at $35 billion. Preview LD by Microsoft 365. And TMS software outlook. LinkedIn and enterprise security tools service millions of global enterprises. High users DITK. NAS and switching cost date is the STAD's profit source. Owned Azure cloud business also $35 billion in quarterly revenue, 30% growth year-over-year. Latest growth rate breaks 40%. Azure carries most global AI computing. It hosts AI models and enterprise upgrades, the core winner of AI infrastructure. CRD personal computing revenue at $13 billion. Includes Windows and Xbox hardware and search business. GrowW stays mild at the moment. The new AI PC era brings new growth in 10 years. Quarterly revenue rose from $20 billion to over $80 billion. Continuous compound growth without setbacks. It handles short-term market swings well. Ninja's outlook looks very clear. NUSD EPS near $17 in June 2026. EPS will top $19 in 2027. Valuation will gradually return to normal. 26.8 times PE for 2026, 23.3 times for 2027, 20 times PE in 2028, 16.5 times in 2029. Star-on earnings will digest current valuation soon. The biggest market dispute lies in returns of huge AI spending. 2026 capital expenditure raise is 61% year-over-year. Microsoft expands data centers and GPU clusters actively. Investors hold obvious worries. Massive e-spending consumes large cash flow. AI commercial progress lags behind investment. Short-term returns are unsatisfying. In the US, right data shows Amazon's AI spending breaks even. Basically, Microsoft and Google see negative short-term returns. Size weighs heavily on Microsoft's share price. Prevail USLY. People worried about insufficient AI investment. Now concerns shift to overspending and slow returns. Market sentiment changes completely. We see opportunities behind the risks. Microsoft's AI value goes far beyond computing. Morgan Stanley points out the market underestimates its long-term potential. By fiscal year 2028, data center capacity hits 20 GWh, 4 times expansion in 4 years. Microsoft owns a dual AI profit model with unique competitive advantages in the industry. First is underlying computing infrastructure. CLS cloud resources and development tools meet global demands for AI computing. Second is upper-tier software ecosystem. EMBES Corp EOT and AI tools. Intel of ICE and enterprise management systems. Nvidia gains from hardware sales. Microsoft wins long-term profits from full corporate AI ecosystem. CI's advantage cannot be copied by others. Wells Fargo also comments market of RFO CAS ES on. Short-term Azure regains it, ignores the great value of AI Mon 80Z Ion in enterprise software as creates huge expectation gap. HER-E is the latest major market catalyst. Nvidia and Microsoft reshape the AI PC industry. Nvidia launches new ARM-based chips. SELPRTS local AI operation and offline AI functions no longer dependent on cloud computing. Microsoft joins this industry revolution. New Surface eLab top authority carries the new chip. For the first time, traded iron LPCs upgrade to smart AI terminals. Nvidia executives say this change is as vital as feature phones turning into smartphones. A brand new computing era has arrived with edge system advantages and local AI tools produce office software and developer resources. Microsoft builds a complete loop of cloud, enterprise and local AI services. It lifts valuation upside in the future. Fin or why we analyze valuation, no risk of business fundamental collapse. Best add-on DCF valuation model fair value at $489 in neutral scenario, $447 in conservative case, $534 in optimistic case. As of the 9th of June 2026, current share price is $411.74. The stock is undervalued in general, but not at the safest bottom level, while LSTRE average target price is $561, more than 20% potential upside ahead. The final conclusion is very clear. Microsoft is not a cheap, speculative stock, but a high-quality pick for long-term gains. Short-term risks exist. Heavy AI spending presses down cash flow. Long cycle for investment generators. Value at iron recovery needs earnings verification. Long-term advantages are irreplaceable. Complete AI ecosystem and loyal enterprise users. Consistent strong earnings. Institutions and elites keep increasing holdings. The best strategy now start while cautiously bullish LD positions in batches. Gradually start RT small positions at current price. If price drops below $400, risk-reward ratio becomes excellent. Perfect window for mid and long-term holds. Microsoft is a core AI leader worth tracking closely. In the second half of 2026, on-CE AI business gains show steady growth, and investment returns start to come through. Size undervalued giant while LC double growth in valuation and business performance.